U.S. economic boom of the 1920s. Why does the U.S. economy do so well in the 1920s? Why is there so much perception of prosperity anyway? Well, a lot of it has to do with World War I. After World War I, most of the older economies of Europe were pretty devastated. And the United States, which obviously the war was not on US soil, got out of the war looking pretty good. The United States had lent a lot of money during the war and was now getting a lot of that paid back after the war, as we'll see in a second. But the US economy starts to really boom. In 1920, 1921, there was a brief recession after the war. There was a bit of labor unrest. And then it really starts to take off. This economy is really it's a consumer-driven economy. Different economic booms will be for different reasons. The economic boom that took place in, say, the 1870s and 1880s was largely a boom that was shaped by the creation of capital. So it was a boom that was created by the creation of railroads. It was really a big industry boom. It wasn't so much, yes, there was consumer buying power that went into that, but a lot of the reason why the US economy grows at such a gargantuan rate in the 1870s and 1880s has to do with industrialization, has to do with the selling of industrial products to other industries. So it's actually a deeper boom. The US economy in the 1920s, it's a boom, all right, but a lot of it's driven by people who have more money to spend. And this is really the rise of our modern day consumer economy that we have today. In fact, 75% of the US economy and the health of the US economy is largely based on what you buy. And so if people don't buy, as they have done during lockdowns during the COVID-19 pandemic, then the economy suffers greatly because the economy is very dependent on consumers purchasing things. And incomes rose during this time, and not only that, but this doesn't happen very often. But as people's incomes rose, the efficiency of factories increased so much that the goods coming out of these factories became cheaper. So imagine that you end up, 1 year in the 1920s, you get a raise, and suddenly between 1920 and 1925, suddenly you're making 3 times what you were. I'm just giving an example. It would be different for everybody. But say you're making 3 times what you were in 1920, and yet those same goods that you were spending half of your income in 1920 now are only taking a quarter of your income. You had a lot more money to spend. And that has a lot to do with sort of leisure boom of the 1920s too. You have explosion of advertising. So the consumer economy is not only motivated by people just purchasing things because they have excess money. They're purchasing things because one of the things they've purchased is a radio, which is selling them things. So you have a lot of things, especially consumer devices like vacuums and toasters and all sorts of electrical devices. All of these things which are proliferating like mad in the 1920s are being purchased, as well as older things, as well as cars, right? One problem with this boom, though, is that even during the 1920s, many of these core industries, these non-consumer driven industries, such as agriculture, coal, textiles, were not really doing that well. They were basically stagnating. Maybe if they were growing slightly, but they weren't growing enough to keep pace with the rising consumer exuberance and consumer spending. And this gulf between these two types of industries started to grow as the 1920s went on. If we look at the types of businesses that arise in the 1920s, and we think about the big businesses in the 1920s, you have to look at the Ford Motor Corporation. You have to look at the Ford Motor Company, founded, of course, by Henry Ford. And there's a little bit of music. We'll just have you watch that. One thing about Henry Ford was one of his real innovation was, yes, he's a car maker, but that's not really what makes Henry Ford famous. What makes Henry Ford famous is his commitment to, or at least his kind of message, which many people bought into, and whether you want to believe it was real or not, this message of democratic idealism, which he built into the business. Basically, he felt that those people he employed in factories should be able to afford the things that they made. And he was able to make cars so cheap, and the Model T vastly outstripped, was so much cheaper than the other cars at the time, that if you look at pictures from the 1920s, you just see seas and seas of Model Ts in every single town. If everybody owns a car, they all own a Model T. You go out to the street today and you see all these different types of cars. In the 1920s, mostly you were just seeing Model Ts because they were so cheap and so many people owned them. Well, the assembly line technology that he really pioneered and put into place was able to cut the time it took to make a car from 12 and a half hours to 93 minutes. So Ford's plant, which by the way is going 24/7, is churning out cars at a breathtaking rate. And because he's able to churn out cars this fast, he's really able, and because he's able to sell a simple car, which works, he's able to sell that. He's able to sell it at such a cheaper price. I mean, imagine if a car company is taking 12 and a half hours to make a car, and then he's taking 93 minutes. Well, look at all the cars that he can make in that 12 hours. That's how much cheaper he can really make it. And he's not, the materials that are going into it, he's buying in vast quantities. And the auto industry in the 1920s quickly becomes an oligopoly, meaning that it's not a monopoly, but an oligopoly is basically rule of a certain industry by just a few corporations. So it's Ford and General Motors, and they really become the major Chrysler. They become the major car companies of the 1920s, and they really kind of muscle out any other competition who tries to make their own car by sort of running them out of the market, either by purchasing their company or sort of running them out of town, and sort of with economic muscle. Well, one thing that we should say about Ford is that Ford's idea comes to be called, in many philosophical circles and many Marxist circles and other political science circles, comes to be called something called Fordism. He kind of named after his philosophy. And it became really popular it actually became really popular in the Soviet Union and became really popular in Europe because parts of Fordism seemed to offer a way of allowing the masses of people access to goods that before they would have been unable to have. And what I mean by that is that if you think about a typical factory of the 19th century, you think about people who are making things in the factory that they might not necessarily be able to buy because they're being paid such low wages, and the goods that are coming out of that factory are being shipped elsewhere, et cetera. We know this story today. There are many examples of this around the world. Well, Fordism and the idea or the concept was that you would create large-scale factories you'd have standardized products that would be created by standardized machines. You'd use these assembly lines, and you could have a low-skilled workforce. It didn't require, you could have an agrarian population that's moving into a factory, such as the Soviet Union was having in droves in the 1920s, and using specially made tools that are made by machinists, not by the workers. These specially made tools would be able to really quickly ramp up industrial production to an extent that so much stuff is coming out of the factory, as you said, as we discussed before with the Ford example, that everybody can purchase it. And everybody in the factory, one of the concepts of Fordism, a key concept, is that the wage in the factory, although perhaps the wage could be lower based on the availability of your workforce and of workers, the idea in Fordism is that you make the wage in those factories high enough so that the worker has enough purchasing power to purchase those things that they make. one of the key critiques of Karl Marx of capitalism was that when these factories sort of fired up, that people who were making things might be making, as you see in this picture, somebody might just be the guy who, puts the bolt in the hubcap. These all come out the other end, and then that person who can't really even see the product of his work, can't even afford the product of his work. Well, Marx said that this was going to be a big thing, was going to be a big problem, which would eventually result in socialism and communism. Well, Fordism becomes a kind of way of, both for socialist governments and communist governments, such as the Soviet Union and others, and also for Europe and European democracies, to kind of find a way to create a system which gives people the ability to feel like they are benefiting from this new society. So it would become really popular. And by the way, it's not just about cars. So it's not just about, Fordism extends outside the making of any sort of product. So it could be like labor-saving devices, food. And the concept is that people who are workers should be able to have basically a kind of a living wage. Now, don't get me wrong, this is not necessarily something Ford, this is something which Ford believes. It eventually becomes a larger concept than just Ford. And I should add, which I did not mention when we were talking about Henry Ford. Henry Ford was notoriously controversial. He was a vicious anti-Semite. He actually published very terrible anti-Semitic books out of Michigan. And so these figures in American history, as we've seen often, in the 1920s, Henry Ford was not a very progressive person, certainly in terms of things like immigration or accepting of other cultures, notwithstanding the democratic, quote unquote, idealism of his factories. Well, one of the things that you have to understand in a global sense about the US economy also, that's the domestic economy, which we talked about there. You should also understand that globally, the US is doing really well. One is that the US has this factory system, has these large corporations now, and there's a great demand for US goods overseas. Remember, Europe was kind of very badly affected by World War I. And that they don't have, and remember, they're all still competing against each other. So they're trying to get their German goods and French goods and English goods and Spanish goods and Italian goods, et cetera, to different markets, just as the United States is. But the United States, remember, the United States has this economy of scale to its economy. It's a big economy. It's geographically huge. It's got a relatively homogeneous buying population. And so the demand for US goods becomes very strong overseas, and the U.S., as it been doing since the Spanish-American War, is creating sort of friendly governments that will purchase many of these goods, both in Central America, the Caribbean, South America, all over the world, Asia, et cetera. One thing about the U.S. economy at its base, and one of the reasons why the US government is getting so much money and the US is also growing, is because the US is profiting off of some of the terrible decisions made after the end of World War I. During the Treaty of Versailles, it was Woodrow Wilson tried to, or at least believed that it would be a bad idea for these governments to ask for too much money from the quote unquote losing side of Germany and Austria-Hungary, to ask for any sort of reparations or any sort of war debt. But this is in fact exactly what the Allies, specifically France and Great Britain, did. They basically made Germany agree to pay them billions upon billions of dollars as payment for all the losses suffered in the war. And the belief at the time was this would be a bad idea because it would stoke resentment. Maybe if everybody just sort of sat down, we'd be able to, it would actually cripple the German economy if you did this. And so these were some of the beliefs. Well, look what happens. The United States really becomes the big winner in this war debt payment scheme. Because look, Germany has to pay 2 billion in reparations to Britain and France. Well, the Allies have to pay war debt payments to the United States, and they end up paying 2.6 billion. But look at this. Germany can't pay, doesn't have the money to pay this 2 billion in reparations payments. And so the US actually loans them 2.5 billion in loans, many of which Germany eventually has to default on. So this becomes a real problem. The US, because of this though, is able to make tons of interest and has also amassed massive gold reserves from the Allies. So it's a huge transfer of gold from the Allies to the United States during this period of time. Well, the party doesn't last. As you know, 1929, the US stock market crashes. You see here is basically the roaring 20s going all the way up to the stock market crash called Black Tuesday. And then it just goes down, down, down all the way to 1932, at which point in November of 1932, you have the election of Franklin Delano Roosevelt and then the New Deal and et cetera. Well, why does this happen? Well, remember those sick industries. Remember coal and agriculture and those industries stagnated. The consumer economy went way up. Well, as the consumer economy went way up and as people had excess money, many people invested that in the stock market. As people invested that in the stock market, many people started to borrow money to invest in the stock market. They call this margin buying. Basically, you don't even have the money. You're buying stocks with money that you're borrowing from banks. On Black Tuesday, the amount to which banks were seen as over leveraged kind of hit. And many of these banks started to collapse because they'd lent out too much money to investors who were borrowing money to invest in stocks. And then as all those stocks went away and all those profits went away, all of these people who had borrowed this money, these investors, lost their shirt and couldn't pay them back, and then the banks couldn't, and then the banks failed. And that's really the beginning of the start of the global Great Depression. Because this first happens, the stock market crash first happens in the United States, this starts to cascade around the world. And the US government, specifically in the form of Herbert Hoover as president, starts to make some terrible decisions in relation to the economy. But talk about that more when we get to the Great Depression. In 1927, the signs of trouble are consumer spending has already started to decline. One thing that corporations would figure out in the 1920s was that if you made something too well, then over a period of time, there wouldn't be any buyers left. So many cars are sold and they're made pretty well that by 1927, pretty much everybody's got a car and then nobody's buying cars. And this goes for other industries as well. Take toasters. I don't know if this happened with toasters, but it's a good example. Imagine everybody has a toaster. Everybody's like, oh, I'm happy with my toaster. Well, those toasters were made too well. You start to have in the 1950s something called planned obsolescence, which means you make a product only so good as that it will decay fast enough such that your corporation will not die before the new round of people comes needing that product. So anyway, consumer spending declines in 1927 because everybody's got everything they pretty much need by that point. Housing construction starts to slow. Layoffs start to begin in 1928. You have this unregulated sort of investment in the stock market in 1928 as people are betting. And then you have the panic, which tanks the stock market in October, what we know of as Black Tuesday. And the rest of this is a story for the Great Depression and what the United States government's reaction is to try to save this economy, which is really spiraling out of control and spiraling downward.